Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we are going to be doing technical analysis on the S&P 500 for Tuesday, March 3rd, 2020. And we will be using my stockcharts.com charting service, of which I am a paid member, and I will leave a link to their service, to their site, in the description box below this video. Now, what we're looking at here is a 5-day 30-minute chart. So each candlestick represents 30 minutes of trading in the S&P 500. And the first thing I want to point out is we were down 2.81% today on the S&P 500, and we closed at 3,003.37. And what we can see here is a couple of things. So first off, over the last 4 trading sessions, virtually all of our trading has been done between 28.60 on the low end and 31.10 on the high end. And I kind of loosely drew these areas just to kind of give you guys some ballpark areas to watch. So again, 28.60 on the low end, 31.10 on the high end. And what we can also see here is this, and I didn't draw a line because I wanted you guys to really see this. Look at this 3,000 area. Any of you that have been following my work for the last couple of weeks know that I've been talking about how round numbers, and in this case 3,000, provide psychological support and resistance areas. And we're clearly seeing that here over the last couple of trading sessions on the 30-minute charts. You can see that the candle bodies on these 30-minute charts, we didn't close beneath, we closed right at 3,000 right here, right? Closed and opened right there on Monday's trading. And then you can see again today that we were able to stay above this 3,000 level on the S&P 500 on the closes. Now we dipped down below it intra, right, in between on the 30 minutes, but the candle body itself was able to maintain that 3,000 level. So to me, that is still somewhat encouraging, okay? And then what I did here, this blue trend line, I drew that just to kind of connect some of the 30-minute candle bodies to give us kind of a trend line to look at, starting with last Friday's, where, again, we hit an intraday low of 28.55.84, which undercut the October 2019 ultra lows, right, the intraday lows for the entire month of October 2019. That was 28.55.94. And right here on this tail of this candle here, we hit 28.55.84. So, I just wanted to draw this trend line so we had something to look at here, and that connects to this 29.50 area, which is important because, as you can see here, that is about where we closed last Friday. It was 29.55 and change, but it's close enough, right? 29.50 area. So we have a lot of support coming together here, and we'll have to watch this 29.50 area. But also, as long as we don't get below 28.60 or so over the next few days, few weeks, and then, if we can get above 31.10, this just kind of gives us some ranges to look at, all right? So, if probably the healthiest thing we can do over the next few days to few weeks is to grind sideways and build a base somewhere around this 3,000 level. And any of you that have been watching my work over the last few weeks know that this 3,000 to 3020 area, even when we were clear up here, I was talking about how this area should provide some level of support if we got down to this level, and that's exactly what we have done. Another thing to note here is we are underneath the 200-day moving average, which is this orange line here. The 200 is trading at 30.49 exactly right now. And again, we're at 3,003.37. So we're underneath the 200-day moving average, which is not good. However, we at least we closed for 2 days in a row now above 3,000. So we have to take what we can get at this point. But guys, I can tell you my proprietary model is still in its most dangerous setting. We have a negative trend, and my risk indicator. So there's a trend component to my model as well as a risk component, and they're both at their most negative setting right now. So this is still a very dangerous market, but the fact that we were able to stay above 3,000 for the day, that's a positive. And the fact that we're kind of in this middle of this trading range right now between 28.60 and 31.10, that should be looked at as a positive. So I wouldn't get too excited here. As I mentioned yesterday, I still want to see 3 positive days in a row. I want to see us get back up and maintain the 200-day moving average. From a purely technical standpoint, that would be a positive. It would sure be nice to see us get back above this 3,100 level and stay above that in 3,100, 3,110 as we see here, even on the shorter charts. But anything above 3,100 would be really, really positive. I don't know, especially if we can do that 3 days in a row. That would tell me that we're kind of going up again. But in the meantime, if we can stay between these levels here, 28.60 on the low end and 31.10, you kind of grind sideways somewhere around this 3,000 level, and even perhaps maintain this this level here around 29.50, and see if we can continue to close above this little intraday trend line that I drew. All of that would be positive. Any close beneath 29.50 to me would be negative, and of course, if we start to close beneath 28.60 on the low end, that would not be good. If you would like to learn more about what it takes to be a successful investor in today's market environment, I would highly suggest you watch my information-packed Successful Investor webinar, which is out on my YouTube channel. I will also leave a link to this webinar in the description box below this video. The webinar lasts about an hour, and I promise you it will be one of the most important hours you have ever invested in yourself.